Hello everyone, how are you all doing out there? I'm Kate Hill, bringing you the best and unbiased and honest content on property along with fantastic hints and tips. Today let's have a look a bit ahead to property investment strategies for the different budgets in 2025. As we look to 2025, the Australian property market offers a diverse range of opportunities for investors at every budget level. From first-time buyers to very seasoned high net worth investors, success in property investment lies in strategy, research, understanding market dynamics. Whether you're targeting the best suburbs for property investment in 2025 or exploring possibly positive cash flow properties, the right approach will position you for long-term growth. So here are what I'm going to call 10 actionable tips tailored to different budgets and levels to help you navigate the real estate markets in 2025. For first-time investors, start with a clear budget. Before entering the market, determine your borrowing capacity and calculate a manageable deposit. This step is, of course, crucial for identifying affordable markets. Areas with steady population growth, like Adelaide's outer suburbs, are a great starting point for entry-level investments. Prioritise cash flow. Focus on positive cash flow properties that, where possible, generate a bit of surplus rental income after your expenses. This is going to help you cover loan repayments and builds financial resilience as things happen. Locations with strong rental demands like regional cities often provide excellent cash flow. Positive cash flow is difficult to achieve in a high interest environment, of course, so you do need to keep your eye on the bigger picture. Don't just go for the cheapest properties because they're cheap. A low price tag does not guarantee growth. Some affordable properties in underperforming areas will lack demand or infrastructure, limiting capital growth potential. So instead, research suburbs with planned infrastructure or employment hubs. I will say this for every investor. For more mid-tier buyers, balance cash flow with growth potential. At this stage, consider properties in emerging suburbs where affordability meets growth potential. Suburbs in Brisbane, for example, that are set to benefit from infrastructure projects and population influx in 2025. Diversify your portfolio. Spread risk by exploring properties across different states or asset classes. Pairing a high growth property with a better cash flow one balances long-term returns with short-term stability. It's also possible to have a high capital growth property with a cash flow that is suitable for you as an individual investor. Be wary of over-capitalizing. Spending too much on renovations or upgrades can not always and won't always result in the equivalent value increase. Instead, focus on improvements that appeal to renters or increase the property's value in a competitive market. For more high net worth investors, you can consider higher priced properties in high demand areas. High net worth investors often gravitate towards luxury properties. While these can offer prestige and stable returns, remember that high price doesn't always equal high capital growth. Growth depends on factors like always demand, location, future infrastructure. There can be real volatility in higher property markets. You need to keep an eye and an objective head about you. Wear your investment hat at all times. You could also explore commercial opportunities. Investing in commercial properties or mixed-use developments, it can yield higher returns. These require larger capital, but often longer-term leases, more steady income streams. There is also higher risk and volatility associated with this type of investment, so you need to be completely clear on the risks involved and whether this is an investment class that you are prepared to get into. Leverage maybe partnerships and syndicates. Teaming up with other investors or joining property syndicates can open doors to larger scale investments like multi-family units, retail complexes. You again need to be fully aware of all the risks, legalities and pitfalls involved in this type of property investment. And one general tip for all investors: focus on tailored cash flow outcomes. Whatever your budget, cash flow is the lifeblood of long-term property investment. Choose properties with rental yields that suit your financial situation, ensuring that you can hold them long enough to benefit from capital growth. Positive cash flow properties provide a safety net, while higher growth properties might require additional funding to support the short term. So price doesn't always reflect growth potential. High property prices often reflect established demand and desirable locations, but they don't always promise strong future growth. For example, an expensive property in a saturated market can plateau in value, limiting your return on investment. On the other side, affordable properties in growth corridors can deliver impressive capital gains if they are located near upcoming infrastructure, schools, employment hubs. Emerging suburbs in Brisbane, Adelaide, some regional cities with increasing populations often outpace more established capital city markets in percentage growth value. The key is to evaluate a property's growth potential by considering population trends, local government plans, and all those economic drivers that we look for, not just the price tag. Always think about the fundamental growth drivers. The long term, the importance of long-term holding power. Property investment is rarely a get-rich-quick strategy. Achieving significant capital growth requires time, often spanning 7 to 10 years. Holding a property long enough to ride out market fluctuations is crucial. Now, this is where, again, that tailored cash flow outcome comes into play. Whether you're generating surplus income with positive cash flow or you're reinvesting in growth-focused assets, managing your cash flow ensures you can sustain the investment journey. Proper cash flow planning reduces financial stress, increases the likelihood of reaping substantial long-term rewards. The real estate market trends in 2025 highlight those opportunities for all investors, but the right strategy depends on your budget, your financial goals. First-time investors can build wealth by starting small, focusing on cash flow perhaps. Mid-tier buyers can diversify and balance cash flow with more growth potential, while those high net worth individuals can explore premium or perhaps commercial properties. Remember, high price doesn't always mean high growth. Affordable properties can outperform when located in promising growth areas. And above all, ensure your cash flow supports your investment journey, allowing you to hold your property through its growth cycle. By understanding all of these strategies and focusing on the fundamentals, you will be really well positioned to succeed in 2025. So whether you're wondering how to start investing in property, you're refining your portfolio, let research and strategy guide your decisions. I will keep you posted on all things property from around Australia. Don't forget to hit like and subscribe if you're enjoying all the content, and I will see you soon. Bye.